For over 12 years as a pensions and investment specialist, I've observed a critical gap in retirement planning across East Africa. The harsh reality is that most people in our region approach their golden years woefully unprepared. Recent data paints a concerning picture. In Kenya, a staggering 80% of citizens over 60 lack any formal pension coverage according to the Retirement Benefits Authority's 2023 report. Uganda's Bureau of Statistics reveals that informal sector workers typically save less than 5% of their income for retirement. Meanwhile, in Tanzania, the traditional family support system is weakening under the pressures of urbanization, leaving many elderly citizens vulnerable. This situation creates three dangerous outcomes that we must address. First, we see elderly individuals forced to work indefinitely. Imagine the 70-year-old market vendors who should be enjoying retirement but can't afford to stop working. Second, there's growing dependence on relatives, which often strains family relationships and finances. Third, and most alarmingly, we're facing an epidemic of poverty among seniors, with 40% of Kenya's elderly population living below the poverty line. However, I bring good news. Building retirement wealth doesn't require endless hustle or complex schemes. The solution lies in strategic, culturally appropriate investments designed specifically for one's own economic landscape. Let me guide you through practical, low-effort strategies that can secure your financial future. Understanding why traditional methods fall short. Let's examine why conventional approaches to retirement savings often fail our region's residents. The savings trap is perhaps the most pervasive issue. While banks offer what appears to be safe haven with 3 to 5% interest rates, these returns are consistently outpaced by our region's 3 to 10% inflation rates. Consider this real-world example. A dedicated teacher saves 500,000 Kenyan shillings in a bank over 10 years. Due to inflation's eroding power, the actual purchasing power of that money diminishes to roughly 300,000 Kenyan shillings in today's terms. Chamas, while culturally significant and socially valuable, present their own challenges as retirement vehicles. These informal investment groups provide important community support and accessible capital, but they lack the structure needed for long-term wealth preservation. Research indicates about 30% of chamas collapse due to mismanagement or conflicts, and their returns rarely keep pace with appreciating asset values like urban land prices. The East African obsession with land ownership as a retirement solution also deserves scrutiny. While land can be valuable, it's often an illiquid asset that can't be quickly converted to cash in emergencies. The market is rife with risks including fraudulent title deeds and boundary disputes. Furthermore, absentee landlords frequently lose up to 60% of potential rental income to unscrupulous property agents, making it an inefficient passive income source for retirees. Proven investment strategies for East African retirees. Dividend stocks represent one of the most accessible entry points to wealth building. By purchasing shares in established regional companies like Safaricom, investors can participate in corporate growth while earning regular dividend payments. Safaricom currently offers about 5% annual dividends. Getting started is simpler than many imagine. Open a central depository system account through brokers like NIC Securities in Kenya or directly through the Dar es Salaam Stock Exchange in Tanzania. For those starting small, SACCO-linked platforms such as M-Akiba allow investments from just 1,000 Kenyan shillings monthly. The real magic happens through dividend reinvestment. Consistently putting 10,000 Kenyan shillings monthly into quality stocks at an 8% return can grow to approximately 18 million Kenyan shillings over 20 years through compounding. Real estate crowdfunding has emerged as a game changer, allowing ordinary investors to participate in property markets without massive capital or management headaches. Platforms like Quera in Kenya enable investments in income-generating apartments from as little as 50,000 Kenyan shillings, while Tanzania's Akiba offers farmland partnerships yielding 12 to 15% annual returns. These innovative solutions democratize real estate investment while eliminating traditional barriers like property maintenance and tenant management. For risk-averse investors, government bonds provide stability and predictable returns. Kenya's infrastructure bonds currently offer around 10.5% interest with tax-free benefits, while Uganda's treasury bills and bonds range between 9 to 15% across various durations. Accessing these instruments has never been easier through central bank portals, capital markets portals, or commercial banks' bond platforms. These instruments serve as foundational elements in any retirement portfolio, providing stability during market volatility. Digital pension plans have revolutionized retirement savings, particularly for freelancers and informal sector workers. Kenya's Mzizi platform allows investment in USD-denominated assets, providing a hedge against local currency fluctuations, while nWealth offers customizable plans starting from 2,000 Kenyan shillings monthly. In Uganda, UAP, Britam and ICEA Lion also offer attractive unit trust solutions. The tax advantages are significant. Kenyan contributors can reduce their taxable income by up to 30% of their pension contributions. Agribusiness presents unique opportunities tied to our region's economic strengths. Innovative models allow investors to lease land to cooperatives, particularly in animal husbandry, coffee and tea sectors, or participate in agricultural supply chains through platforms like Twiga Foods. The Uganda Securities Exchanges also offers a commodities market. These ventures typically yield 10 to 25% returns, especially when focused on export markets. Implementing your personal wealth blueprint. Creating lasting retirement wealth requires a systematic approach. Begin with a thorough financial audit, calculating your net worth by subtracting liabilities from assets. Budgeting apps like Nala or Moneylover or Money Manager can provide clarity on spending patterns and savings potential. Next, select one or two investment strategies aligned with your risk tolerance. Conservative investors might combine bonds with digital pensions, while those comfortable with higher risk could balance stocks with agribusiness investments. The key is starting with what you understand and gradually diversifying. Automation transforms retirement planning from aspiration to reality. Establish standing orders that transfer investment funds immediately after receiving your income, making wealth building a non-negotiable priority rather than an afterthought. Continuous education separates successful investors from the rest. Take advantage of free resources like Kenya's Capital Markets Authority webinars or Uganda Securities Exchange investor guides. The financial landscape evolves constantly, and staying informed ensures your strategies remain effective. Regular portfolio reviews, ideally quarterly, allow for necessary adjustments based on performance and life circumstances. This disciplined approach prevents emotional decision-making during market fluctuations. Taking action toward financial freedom. As we conclude, remember this powerful truth: a dream written down with a plan becomes a goal. Today marks the first day of your transformed financial future. I urge you to take your concrete steps today. Should you want any help, do not hesitate to reach out. Retirement planning transcends age. Whether you're 25 or 55, today's decisions determine tomorrow's quality of life. The strategies we've discussed represent proven pathways to financial security, but they require your action to materialize. Your future self will look back with gratitude for the steps you take today. Did you find this video useful? Do not hesitate to like the video and follow us for more tailored financial information.